And Stacey, the dust has cleared a little bit from the big release last week. Everybody was waiting to hear what Nvidia had to say. Turns out they had much better numbers than people had anticipated, much better guidance than people had anticipated, and yet the stock sold off, at least initially.
Yeah, initially it didn't, right? Initially it went up,
initially it didn't,
and then
it went up, and then but then it gave back for the trading session. The first full trading session after the release of earnings, you definitely saw a huge chunk of the stock taken out.
Sure, but it wasn't just Nvidia, right? Everything sold off, and in fact, Nvidia actually outperformed the semi sector that day. So it wasn't just. And I'm not convinced that the sell-off we saw that day was necessarily like Nvidia driven. Although I do think you're right. People are starting to get, nervous about like AI. I mean, they've been nervous, right, about bubbles and everything, but that did sort of come to the forefront, partially just because the numbers are getting so big so quickly. There were some other events last week as well. We had the release of Gemini 3 from Google, which looks like a great model. And some of the other semi names, you mentioned AMD, for example, which was down a bunch. Some of the other names that are, say, more dependent on OpenAI sold off more, I think, on the fact that Google's Gemini looks really good. So I think there were a lot of factors going on last week. I don't think it was just in Nvidia. Although I'll be honest, I would have expected Nvidia's results to drive a little bit better performance. That is true.
Me too. I know you raised your own price target for Nvidia after you saw the company come out with its shares. You raised your price target and you raised your earnings estimates pretty substantially.
Yeah.
I guess if I'm trying to figure out where things stand at this point, how much of this is it easy for you to do as an analyst, where you say, these are my expectations for earnings, this is how I compute this out, and here I get to this. If you've got a lot that's riding on sentiment right now, how do you factor that in?
Well, I mean, here's our earnings and here's everything. That's the easy part. Right? I mean, actually getting it right can be tough. And look, sentiment and everything else is always part of this. Where I feel okay about Nvidia right now, there's, like I said, it's not like, everybody has to jack up the multiple to get to the targets to where they. I mean, and I've said this many times. On this station, like the stock today is much cheaper than it was before any of this started a few years ago. Like the stock is up a ton, but the earnings have more than kept pace with it. Like it's trading in, I don't know where it is, mid 20s price to forward earnings right now. It's not even aggressive if you think the numbers are anywhere close to right. So the earnings and this is the issue, right? That people are, when you see something like that, what it means is that the market is anticipating that those numbers are not sustainable, that it is a peak. And so, I mean, that is the debate now. How long can this go on? And you start to look at it, though. I've been saying this since this started. At some point, presumably there'll be an air pocket or something. Nothing goes up into the right forever, but it's clearly not now. And I don't know what it is, but it's not now. It's not this year. It certainly doesn't look like it's next year. And I mean, it may not be 2027 either. It's like things look.
Bank of America said that investors misread the numbers in the recent decline in Nvidia's shares, advising customers to overlook short-term volatility and instead concentrate on the company's strong demand signals and outstanding free cash flow performance. BofA analyst Vivek Arya stated in a note released on Friday that the stock decline is probably the result of misinterpreting the company's quarterly financials, ignoring the company's strong demand signals, visibility, and, most importantly, free cash flow generation. Arya also out that free cash flow increased plus 60% QOQ to over $22 billion, second largest ever, a figure he said was essential to comprehending the real foundations of Nvidia. BofA reaffirmed its $275 price target and buy rating for Nvidia. Working capital patterns have been a major source of market concern, but BofA said concerns about growing receivables and inventory are unfounded. Arya pointed out that days sales outstanding decreased to 53 days from 54 days QOQ, indicating that it is not the total amount of receivables, but rather their ratio to sales. Regarding stocks, the bank clarified that Nvidia is increasing shipments of more complicated systems, such as Blackwell GB200 and GB300 NVL72 racks, and that, considering the 6-month deployment cycle for Blackwell-class platforms, we would be more concerned if Nvidia inventory wasn't increasing quickly. BofA noted that Gemini's performance would detract from OpenAI's models due to competition from Google's proprietary TPU chips, but emphasized that Nvidia still holds a stronger position throughout the ecosystem. According to the statement, its GPUs have the fastest time to market and best performance watt and are widely available in every cloud and used in nearly every other LLM. BofA urged investors to overlook quarterly noise, concluding that Nvidia remains enticing at 24.18x CY 26.27e PE versus 40% plus sales/EPS growth. As trade talks between the United States and the European Union continue in Brussels, U.S. Commerce Secretary Howard Lutnick said that President Donald Trump will personally determine whether to permit Nvidia to sell its cutting-edge H200 chips to China. Speaking from Europe, Lutnick characterized the Nvidia decision as being directly on Donald Trump's desk, with the president considering advice from a number of advisors, including Nvidia CEO Jensen Huang, who has supported the sales. Lutnick framed the issue as a choice between letting China utilize American technology or competing independently in the AI race. He's going to decide whether we go forward with that or not, and we will execute it however he decides to go forward, he added. After hearing oral arguments, the Commerce Secretary stated that she was certain the Supreme Court would support the administration's use of the International Emergency Economic Powers Act to impose tariffs. I was really sure that we and the president were going to win these IEEPA tariffs, he stated as he departed that day. Lutnick stressed that the president had numerous other powers, such as Sections 232, 301, and 338, to impose tariffs, even if the court decided against the administration. Lutnick stated that everything is on the table in the continuing trade negotiations between the United States and the European Union, which he described as a great partner with 450 million citizens and a $20 trillion GDP. In the negotiations, the U.S. would make concessions on steel and aluminum tariffs, while the EU would reevaluate its digital laws to make room for American tech firms. Noting that the EU is not getting the same amount of investment as the U.S., where tech companies are spending trillions on data centers, Lutnick stated, "We think it is very important that they understand our digital companies." According to Lutnick, American corporations could construct data centers in Europe if European regulators relaxed their regulations. This could attract hundreds of billions, if not $1 trillion, of investment from U.S. computer giants. The Commerce Secretary also highlighted the Trump administration's emphasis on affordability, saying that in addition to working to increase earnings, they are pursuing every avenue to guarantee affordability for consumers. Following the release of its third-quarter fiscal 2026 earnings and fourth-quarter projection, Nvidia surged as much as 6.5% in after-hours trade on November 19th. The report's most astounding figure was concealed in plain sight, even though some investors might have been preoccupied with the sales and earnings per share, EPS, beats. Here's what I found so amazing about Nvidia's most recent quarter, and why the AI growth stock is still a fantastic investment right now. In comparison to the same quarter last year, Nvidia's revenue increased by $21.92 billion. However, operating expenses only increased by $1.17 billion, and the cost of revenue only increased by $6.23 billion. This indicates that the majority of the extra money is being turned into operating income by Nvidia. Nvidia's operating margin was greater this quarter than it was in Q3 of fiscal 2025, despite concerns that the company's margins would contract as a result of competition and rising R&D expenditures. More significantly, Nvidia turned an incredible 56% of sales into net profitability after taxes. If oil prices and Saudi Aramco's profits don't rise, Nvidia, which made $31.91 billion in net income during the quarter, would undoubtedly surpass Alphabet as the most lucrative corporation in the United States, and most possibly the globe within the next year. Although Nvidia's stock price garners a lot of attention, long-term investors should keep their eyes on the company's performance. Simply put, no business in the world that is even near to Nvidia's size is increasing its profits at this rate. Nvidia is an intriguing long-term investment due to its industry leadership, large margins, and technology at the center of AI data centers. Regarding the value, Nvidia is priced as though its earnings will continue to increase by double digits every quarter. Its primary clients, the hyperscalers constructing data centers and developing AI models, must continue to invest in order for it to occur. These hyperscalers need to keep producing robust cloud computing growth from important clients in a variety of industries. Spending on AI and computation must be beneficial for cloud users in order to achieve that. If end-user spending isn't profitable, the entire value chain collapses. Even while Nvidia's performance is outstanding, it would be a mistake to ignore the double-edged sword that comes with being the unchallenged leader in networking and data center computing. Although Nvidia stands to gain the most from greater AI investment, it would also be among the most negatively impacted businesses in the event of a significant slowdown. Fortunately for long-term investors, Nvidia's balance sheet shows $60.61 billion in cash, cash equivalents, and marketable securities, while its long-term debt is only $7.47 billion. Nvidia is without a doubt the best-positioned AI business to weather a slowdown when combined with its extremely high margins. Today's top-heavy, high-end market is typified by Nvidia. Nvidia stands out from other areas of the market due to its strong fundamentals, which have underpinned the stock's run-up, while other areas have arguably overextended prices. For investors who anticipate a steady increase in hyperscaler AI capital expenditures, Nvidia is a solid investment. The world has never seen a leader of global industrial policy like Jensen Huang, the creator and CEO of Nvidia. Not because of his popularity in the White House, which he frequently challenges, but rather due to two recurring themes in his management of the top AI hardware and software infrastructure business. His vision of how accelerated computing can advance the global economy and individual nations in terms of productivity, progress, and the possible eradication of poverty and disease, not to mention his command of some of the world's most gifted and driven engineers. His readiness to board a plane multiple times a month to travel to Saudi Arabia, London, Washington, D.C., Beijing, Korea, and Taiwan to visit his partners and clients worldwide in an attempt to manage relationships and explain the AI transformation that is necessary, with or without NVIDIA GPUs. Prior to last week's Q3 announcement from NVIDIA, I made it clear that analyst sales projections for the following year were still far too low at $275 billion. I also informed media and my followers that in 6 months, the figure would have risen to nearly $325 billion. The analysts had to crunch the figures in their spreadsheet models, while the beat and raise quarter encountered selling and uncertainty. What did they do? Indeed, they increased the high forecast to $327 billion for the upcoming fiscal year from $275 billion to a consensus of $293 billion. View my preview, which includes some of Jensen's most significant remarks from his participation at the Future of AI conference in London 2 weeks ago, here. Bubble talk is inexpensive. How to handle the concern, why do analysts see the AI revolution with such apprehension? I'm not sure the exact answer to this issue, but it might be a fear of taking a risk on the first $5 trillion firm in history, which is absurd given that in June 2024, I set the street-high price target of $200. I believe that concerns about the AI bubble are also a factor. Given that the present correction may push Nvidia shares as low as $150 in the near future, who wants to predict that they will reach $300? Nvidia's report and forecast were excellent. Furthermore, I'm shocked that the stock isn't trading above $200. It's obvious that big investors have other concerns. We'll proceed after I give my update for today. I had a conversation with Quartz journalist Shannon Carroll immediately following the conference call. Despite my excitement, she asked me at the end of our about 30-minute conversation whether there was anything in the report or the call that disturbed me. After reviewing my notes and examining the 6 analyst inquiries from prominent houses, I replied, no. They are supposed to search for weaknesses in the armor, but none were discovered. If they want to complain about margins possibly slipping, I can only say that it is natural for margins to drop from 75% to 70% when you are innovating on a 1-year cadence that the hyperscalers keep demanding, and you are doing 5 different, extremely complex things to improve networking. However, that shouldn't affect the top AI infrastructure providers' development and value offering. This isn't the erratic iPhone cycle of consumers. The conference call clearly did not include Michael Burry, who is known on X as Cassandra Unchained. Or perhaps he was and chose not to acknowledge it. In any case, he ought to have mentioned this when he later shared this along with the now famous Bloomberg graphics about circular AI spending. Suspicious revenue recognition is present in every company listed here. It would be impossible to interpret the actual chart with every give-and-take arrangement. This will not be seen as a flywheel in the future, but rather as a picture of deception. The true end demand is absurdly low. Nearly all clients rely on their dealers for funding. You'll feel proud if you can identify OpenAI's auditor in 1 hour. Cooker's opinion, Burry might be correct in the end. For ORCL NAMP, CRWV, the areas of dubious extra debt were already made public. However, I believe he is at least 2 years ahead of schedule overall. In her introductory remarks, Colette said this was on track. However, Morgan Stanley's Joe Moore was the first person on the call to ask whether there was any chance of improvement and whether this meant an additional $350 billion over the following 5 quarters. We're on pace, but if we didn't mention that we'll likely be taking additional orders, we wouldn't be done, Colette said, as she bullishly seized the question. For instance, we announced today that we have an arrangement with Saudi Arabia that will result in an additional 400,000 to 600,000 GPUs over 3 years. Anthropic is new as well. Therefore, there is undoubtedly a chance for us to have more than the $500 billion we declared. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
You have these really fast developments in technology, and this seems faster than just about anything we've ever seen. Yeah. You're right, the leadership positions can shuffle and jostle, like you mentioned, Gemini 3 coming out and being maybe something that could steal a lot of thunder from OpenAI. But then you also have this threat of the ASICs, the custom AI chips, that all of the big purchasers of Nvidia chips, AMD chips, are also looking to make their own. How do you get your arms around that?
Sure. Yeah, and by the way, even with that, it sort of flows back to Google. Like the only company that's really deployed ASICs in sizable at-scale volumes is Google. And to be fair, they've been doing this for well over 10 years. Like this is why everybody else is much earlier in the process. It takes time. Even Amazon, they've deployed, they have something called Trainium. They've deployed a little bit, but it's not anywhere near on the scale that Google has. That folds into the Gemini point earlier. I mean, they trained Gemini on TPUs, although they've been training all of their models on TPUs. TPUs are their chip. They've been training all their models on TPUs for a long time. I get the competition worry. And look, this is semiconductors. There's always competition. There's always someone looking to eat your lunch. And it's imperative on you to make sure that doesn't happen. At the same time, though, I don't really worry too much yet. I think it's the wrong question. The question right now is not who's winning or losing, in my opinion. It goes back to the first one. Is the opportunity in front of us still big or is it not, right? Is it sustainable or is it not? Because presumably we're not in a saturated, mature market. Like we better not be.
Sure.
And if the opportunity is still big, like they're both fine. If it's not big, they're all screwed, right? We're not at the point where I think you necessarily have to worry who's winning or losing yet. The pie is still hopefully getting bigger.
Okay, Stacey, we got to run, but your favorite first, second, and third choices.
Yeah. I mean, our general call this year has been kind of own the high quality AI names and ignore most of the rest. It's working pretty well. We like Nvidia and Broadcom. I think you should still own both. The GPU versus ASIC narrative tends to go back and forth. You never know which way it's going to be. I think they're both winners. We like them both.